Hi and welcome to program 20 in this series of programs and tutorials that focus on TradeStation EasyLanguage. If you're not part of our email list, then please go to markplex.com, markplex.com and sign up for our email list, and I'll be happy to let you know when I create a new program or release a new tutorial. So today's program 20, is based on the work we did in tutorial 63. And if you remember tutorial 63, we were looking for what we termed CCI trendline breaks. In other words, we found two CCI pivots and we drew a line between them, continued the line, and when that line was breached by the CCI, we said it was a trendline break. This program uses this break as a signal to buy or sell. It also uses some additional conditions, and I'll explain those in a moment. Incidentally, if you do decide to download this program, I'm going to include the tutorial 63 indicator, and I'm also going to include a bonus video which explains how I went about converting the indicator to the strategy, which is something that you might find useful for other indicators that you want to convert to strategies. So anyway, let's go ahead and just go through the inputs, and I'll explain what each of them does. So the first three, left strength, right strength and length, are used to determine the CCI pivots using the standard TradeStation pivot function. CTS, this is the number of contracts that we buy or sell. Trail val, this is a user input that determines how close or how far the trailing stop is located. It is calculated by multiplying this number, this user input, by the min move divided by price scale. And then for a long trade, we subtract this amount. And for a short trade, we add this amount to the entry price. And then as the price in the terms of a long trade goes up, then the trailing stop trails. And similarly for a short trade. Now all of the both the trail val, target 1 and target 2 are all calculated using this user input multiplied by the min move divided by price scale. Target 1, this is used to, or rather TGT1, user input TGT1, is used to define the first target. So what we do is we add the calculated value of the target onto the entry price, and then target 2 is in addition to target 1. So for example, if we were in a long trade and target 1 was TGT1 was 171 and TGT2 was 1, then the second target would be equal to entry price plus 172 multiplied by the min move divided by price scale. First target contracts, this is the number of contracts that we take off at the first target. The remainder would be taken off at the second target. Then the filters that I mentioned before in terms of the additional conditions that we need to make a trade. In fact, to make a long trade, we would need a trend line break. We would also need the CCI to be less than or equal to the CCILowFilter. And we would also need user-defined filters, long filter 1, long filter 2 and long filter 3 to evaluate to true. Similarly, for a short trade, we would need the trend line break. We would also need the CCI to be equal to or greater than the CCIHighFilter. We would also need user defined filters short filter 1, short filter 2 and short filter 3 to evaluate true. And CCI length, this defines the length of the CCI. And then finally show lines. If this is false, we only show the trailing stop if date equals current date. If it's set to true, then we always show the trailing stops. We draw a line on the chart representing the trailing stop. Obviously, depending on how wide your stops are, you might not be able to see them on the chart window that you're looking at. Now, as I mentioned, you can set up some filters. These are all set to true initially, but you could, for example, set up a long filter based on stochastics, and I've included an example of that in the program itself. You can see it here. I've also referred to that on the program 20 page. Okay, so I did an initial optimization, and firstly looking at strategies just to show you what my commission and position slippage settings were. $2.50 per share for commission and $12.50 per share contract for position slippage. And then just having done an initial optimization over, I think we've got this set up for 12 months. Oh, okay, 2 years on a 5-minute bar. And the strategy graph looks something like this. This is without the user-defined filters, so you would obviously want to modify this to use some of those filters that we just discussed a moment ago. Anyway, as I say, the program, if you do download it, you will also get the indicator from tutorial 63, and you will also get a bonus video that explains the way that I converted the indicator into a strategy. So I hope you might find this useful. Thank you.